We have to start the day talking about some big news about Deutsche Bank. DB is at last waving a white flag of sorts, acknowledging its many problems and publicly hitting, quote, restart, in the words of its CEO, Christian Sewing. Now, the bank will cut 18,000 jobs over the next 3 years, and those cuts have already begun. The bank will also eventually exit fully the business of buying and selling stocks. Wow. Now, this process will cost more than $8 billion US, and Yahoo Finance's Oscar Williams-Grut joins us live from London with more. Oscar, you guys have been all over this story, multiple angles on the site this morning from you guys. Tell me what you're hearing, especially one of those headlines was quite striking about Deutsche Bank employees in tears this morning.
That's right. My colleague Tom was at the East London office down in Liverpool Street this morning, standing outside with pretty much the world's press as well. Everyone was outside there. This is the London offices of its trading operation. And as you'd expect, there was a steady stream of people who'd been let go leaving the offices. Most didn't want to talk. They've been told not to speak to the media and seem to be honouring that despite the fact that a lot of them have just been let go. But a few of them were talking. What they were saying was there were tears on the trading floor today as there were job cuts announced. People arriving to be told that they had to clear their offices by 11 a.m. because that's when their passes would stop working. There are pictures emerging of people leaving with suit bags, boxes full of documents, things like that. We also had 30 pizzas being delivered around lunchtime to the office, perhaps showing that, that people who are remaining need to G up their spirits. But really, this is a mood across the city, not just Deutsche Bank. I've been speaking to other people recently, and they're saying that it's a pretty gloomy outlook in London's financial sector at the moment. HSBC announced job cuts earlier this year, so did Nomura, so did SocGen, and with Brexit looming over everything, it doesn't look like things are going to get any better here.
Yeah, Oscar, now when we hear about cuts from a big bank like Deutsche Bank, even when you hear about tears from employees, I think a lot of people maybe can't gin up much sympathy for people from a big bank, especially when we've heard so much news about Deutsche Bank. Now, as you correctly mentioned, a lot of the financial system in London going through the same thing. It's not just DB, but at the same time, we've heard a lot of reports about sort of some bad behavior at DB recently. Multiple investigations going on. There was this stuff with behavior, sort of actions by the Jared Kushner account being flagged for suspicious activity, and then Deutsche Bank employees kicking that up to compliance, and Deutsche Bank executives choosing not to report that or investigate it further. Give me a little bit of that background.
That's right. Well, I think you're right to flag that there have been a lot of investigations for malpractice and bad behavior. But I think similarly, again, this is something that goes across the banking industry. They're dealing with the legacy of the 2008 financial crisis. The stuff around the Trump accounts and the Jared Kushner, that is slightly unusual and specific to Deutsche Bank. But I don't think that necessarily has a broader impact on its business. That is quite a specific incident. Something that perhaps does have a bigger impact is the mirror trading scandal that hit the bank a few years ago. This was billions were being moved out of Russia through basically something called mirror trading. They would make it look like money was flowing through legitimate means. Actually, it was just they were booking false trades to move revenue artificially out of Russia. That was something that they got a major ticking off from regulators for, and there are still investigations ongoing to that. But the broader picture here is that in the decade since the financial crisis, regulators have been a lot hotter on all of this sort of stuff. That's led to more enforcement actions, more fines, and also new regulation that's made the cost of doing business has just gone sky high. That's what we're seeing here. Deutsche Bank are really the last on the street to bite the bullet on this and say, actually, we need to make changes. The method of doing business that we had before is just no longer profitable. And this really, what we're seeing here is a dam break, and the job losses are a sign that this really should have come a long time before.
To that point, retail banking in Germany has typically not made a lot of money. It's not necessarily a cash cow. How do you actually think about the landscape right now, and who would be the big winner here in light of Deutsche Bank's major downfall?
Well, this is one of the big questions that investors are asking this morning. Actually, you've announced this turnaround plan a lot of it focuses on cutting back on the unprofitable parts of the business. Where is the new money going to come from? As you point out, Germany is not a particularly profitable market, the retail market. Add to that the fact that Germany is teetering on the brink of recession at the moment. So the idea of doubling down on that doesn't look especially appealing either. Deutsche Bank say they're going to focus on things like asset management, corporate banking, things that they've traditionally been very strong in. And they also point to efforts to digitize. They promise a lot of digitization of the back office, cutting out costs there, things like that, that can hopefully bring them growth. But again, they're behind the curve on this. People have been doing that for years as well. And there's a big execution risk. Deutsche Bank do not have a good track record on transformational change. This is, I think, their fourth turnaround plan in 5 years, which speaks to the fact that none of the other ones have worked. So why should investors now suddenly trust them? And you've seen this in the share price reaction. The shares were up 5% at the open in Germany this morning, but have since crashed back down. We see that they're down 6% now as investors pour through the documents and realize actually there are a lot more question marks than solutions being offered by these plans.
Now, Oscar, Deutsche Bank CEO Christian Sewing had some remarks about this. I understand most people kind of thinking that he's finally being very candid about the deep problems at DB. I believe we have a clip. Let's take a look.
The world changed over the last 10 years. We had the financial crisis. We have regulatory reforms. So yes, we stay global. We stay in the important investment banking, but we need to get more focused in order to apply our power there where we compete to win and where we can win.
Of course, he sounds a little bit defensive, Oscar, but at least he's admitting it's a full transformation. As I said earlier, he said that DB is hitting restart. What do you make of what Christian Sewing said?
I think it's interesting. I mean, he's always been very candid in talking about the fact that the bank does need to change. In the most recent set of results, I was just reading over them this morning, he flagged the fact that they made the first net profit since 2014. But in the top line, he was saying this is nowhere near where we need to be. So he knows that things need to change. And I think that's really what makes him slightly different, is that he, A, knows the bank needs sweeping changes, but B, he has buy-in from the board. He is a long-time Deutsche Bank employee who rose through the ranks and is German himself. John Cryan, who he replaced, I think there was a bit of a culture clash there. He came from the sort of English school of investment banking, and he wasn't as successful in pushing forward the change. But Sewing, as we've seen there, he is very good at both flying the flag for Deutsche Bank, insisting that they are still competitive, celebrating their history, saying that it was the right decision to move into global investment banking in 1994. But, as he said there, the world has changed. Deutsche Bank needs to change too. The big question, though, is whether he is the man capable of bringing about that change. Nobody doubts that the bank needs to transform. Whether it can do so successfully under this plan, we'll have to wait and see.
Yeah, absolutely. We'll also look to see how much of a damage the stock keeps taking. Thanks so much, Oscar. Good stuff.